Hi, welcome back to the channel. Today we are looking at FANG. FANG is a name used to describe some of the dominant companies in S&P 500. FANG is FAANG. F stands for Facebook, which is now Meta. A for Apple, and A for Amazon, N for Netflix, G for Google. Companies have actually outgrown S&P 500. They are the largest companies, mostly tech, in S&P 500. FANG was coined by Jim Cramer, the television host of CNBC Mad Money in 2013. 5 companies combined account for approximately 18% of S&P 500 and 1/4 of Nasdaq 100 index. Every super investor, or almost all super investors, have one or two of these stocks in their portfolios. Let's have a look at them one after the other. Their current market cap, PE ratio, earnings per share, and market prices. We are on Meta platform, which is Facebook. We are on a weekly chart. I just switch over to daily chart now. Facebook market capitalization is about 923 billion, close to 1 trillion. I would say it's currently ranging between 300 and 340. It has been within this range for quite some time. Facebook earnings is in 16 days. Let's just go back on a weekly chart. The PE ratio for Facebook is 23, very reasonable, I would say. You can see their earnings per share over the years. Facebook is one of those platforms. You just gotta have Facebook. It's going nowhere, no matter how many times they are injected. Facebook is there. You gotta have it. It's you love to hate it. You hate to love it. But then Facebook is very reasonable priced, and I would say it's as a close of trading on Friday. Facebook is 331, trading minus 13% from the high. The high is 384. So yeah, Facebook is one of those stocks I think you should have in your portfolio. We are looking at Apple on a weekly base. Wow, fantastic chart. Look at it. Wow, wow. Apple is on a uptrend, definitely. Apple is trading minus 5% from the all-time high, which is 182. Apple recently, about two or 3 weeks ago, reached 3 trillion market cap, becoming the first American company that reached 3 trillion market cap. Shares outstanding is 16.4 billion. The PE ratio for Apple is 31. Reasonable for a growth stock like this. And I mean, we all have iPhones, iPad. I'm actually using my Mac laptop. We just love Apple, but then the stock is, I would say, a little bit on the high side, but then you're just gonna have it anyway. You can see the earnings per share over the years. Apple earnings is in 10 days. But look at the chart. Let's look at the daily chart. This stock has done phenomenon. Has done extremely well. Yeah, I think the support around 170. Here I would say here, around here, because it's been between 168 and 175. Dancing around here. Well, you never can tell whether it's coming back down or. But look at the chart. Look at the chart. It's an upward trend. Apple, we gotta love it. We're looking at Amazon, Amazon. We have FAA, we have done Apple. We're on Amazon now. Amazon has done phenomenon. However, recently it has been trending down. Amazon done fantastically well in 20, um, under the lockdown was one of those stocks that did phenomenon, tremendously well. Amazon on a weekly chart shows that you can see, wow, Amazon has been ranging within this range. You can see Amazon is currently trading at 3,242. The all-time high is 3,773. So Amazon is trading minus 14% from the high. Market capitalization is 1.6 um, trillion. The P ratio is 63, extremely high. But for a growth stock, I wasn't one of those people that actually profited a lot from Amazon. But then, you know, Amazon did phenomenon. It extremely well, did extremely well. Look at the earnings per share over the year, but recently it has been trading down. I think the last earning wasn't so fantastic, but Amazon is yeah, definitely one of those stocks you should have in your portfolio. Yeah, most of the super investor, either of them have Amazon and other. And when I talk about super investors, I'm talking about the likes of Warren Buffett, Bill Gates, and so on. We are looking at Netflix. Netflix, in my opinion, Netflix shouldn't be part of FANG. It should have been Microsoft. But that's my opinion. Jim Craver knows why he included Netflix. But let's say um, Netflix is trading 525 as at close of trading on Friday. We are looking at a weekly chart. Um, Netflix, it's 25% down from the all-time high, which is 700. Market capitalization is 232 billion. Shares outstanding is 443 million. The PE ratio for Netflix is 47, pretty high. I would say Netflix. If I could recall, Netflix has just started making money about 2 or 3 earnings ago. But then Netflix. Let's look at a daily chart. Of course, Netflix has been ranging. Wow, it's trending down. Uh, it might actually get to 500. We don't know. Actually, what I'm going to do is I'm going to actually compare all the FANG stocks with S&P 500 in the last 1 year, so that we can see who which of them has actually outperformed. I know most of them outperform S&P, but let's see which of them outperformed most. So yeah, but this is Netflix. Netflix stands for the N in FANG. We are looking at Alphabet. Alphabet is Google, which is the last letter in FANG, G. Alphabet on a daily chart, you can see is on a support here. It actually been consolidating or ranging between this area for quite some time. You can see that their earnings is due in 15 days. Let's look at the weekly chart. The market cap is about 1.8 trillion. Yeah, about 1.8 trillion. The P ratio is 30. For a growth stock of this magnitude, I would think it's not too high. It's quite reasonable compared to others stocks you have in Hack, Hack K, Hack Fund. I don't want to go into that, but then yeah, look at on a weekly chart. Wow, what a beautiful trend! Look at it, up, down, up, down, down, up. This is a beautiful chart. You can't get any better than this. So it's ranging around here. You know, So it's ranging between 2,700 and 3,000. I would say Alphabet, Google, YouTube, and all that platform. It's well reasonable priced, to my opinion. You can have it in your portfolio. Share outstanding is 663.8 million. You know, 1.8 trillion market cap. So yeah, uh, Alphabet, Google is actually giant. Anyway, let's look at the comparison I said between all the FANG stocks and S&P 500. But then, guys, do not just buy stocks because somebody on YouTube is saying they are reasonable priced and all that. Do your market valuation. Do your valuation. Make sure it's in line with your own principle. So, guys, we are looking at the chart, or we're looking at the comparison between Amazon, Google, Apple, Facebook, Netflix, and S&P 500 in the last 1 year. Let me just say, let me adjust it. Okay, in the last 1 year, let's see which of them has outperformed. Which of them has outperformed the most? Outperformed S&P 500 as a benchmark. You can see that Google top top every one of them. Google is the most performed. After Google, it's Apple, Facebook, then S&P 500, meaning that Netflix and Amazon they underperform the S&P 500. Let's look at Nasdaq. Let's include Nasdaq. Yeah. Okay. Now we have Nasdaq on it. Definitely, it shows that even Nasdaq outperformed Netflix and Amazon. Netflix is trending down. Amazon is down about, you know, I can't remember, but it also down. So it means that if you had your money in the last 1 year in Google, Apple, Facebook, you would outperform the market in the last 1 year. Guys, do your critical valuation. Check your portfolio. If one of these stocks are not in there, find a way to see how you can had maybe when they come down, we're going through a lot of turbulence time now. Markets are trending down. There might be revaluation going on at the same time. The interest rate is hiking, inflation and all that. The Fed is going to increase. Uh, there will be about 3 or 4 hike this year. Um, there are a lot of things going on. You might find an opportunity to get on one of these FANG stocks. Before you invest in the FANG stock, check your valuation method. Make sure you are not just investing because you watch a video on a YouTube. Valuation often depends on whether you are a value investor or a growth investor. For value investor, they believe in low PE ratio, while a growth investor believe in high PE ratio, hoping that the earnings growth will cover up for the prices. Thank you for watching this channel. Please like and subscribe if we have had value to your time. Make a date with us. We will be producing more videos and giving you more analysis to educate you on your investment journey. Thank you.